Hey everyone, welcome to the weekly review. This week we had CPI, we had that scare of J Powell getting fired, which brought the market down a bit, but it still was a sideways correction like I explained last week. Whenever we had weakness in like IWM, for example, on CPI, they had minus almost 2%, 196, and yesterday it had minus 71.71. But both days Qs stood strong. Yesterday only minus zero point 0.1, and on the CPI day only it had plus 0.9. And This is the type of sideways correction I was talking about. We actually went higher, not even sideways, uh, but this seems to be it. I don't think we will correct significantly anymore. Maybe on the news that J Paul gets fired, but I doubt it as well. Like we had this recovery go down and recovery very quick. I think there's potential for the market to go down again, but I don't think they care that much about J Paul. He doesn't have a lot of mandate left anyway. I think they would be focused on who's coming next. And if someone like Waller would follow, that would be great news for the market. So the J Paul firing is a non-event in my opinion. At most, combined with flows and everything else, and the weakness period post OPEX, we would get a pullback. Question is if it happens next week. Like, does Trump want a new Fed chair for the next Fed meeting, which is on the 30th, 29th and 30th, so before the 29th actually, because the what we see is the second day of the meeting on the 30th. Or is he waiting a lot longer and we get it before the Jackson Hole, which is somewhere around here? Don't know, don't remember exactly. My expectation is that we will get it 100% the J-Power firing before Jackson Hole. So yeah, this being said, now on the CPA side, uh, I think it was still weak. Don't see big increases. And there's an interesting thing happening, and that is the dollar. I'll turn on the pivot ribbon. So I made a separate video about this and the Sati stack all together. I'll be using this a lot moving forward, so recommended to watch this and also incorporate it into your trade system. Point is, this is for DXY crossing into positive territory. Uh, USD Euro is the most important one because it's like 65%, 66% of DXY. So uh, it has that look. Basically, we crossed over, returning the ATMA into support, bouncing of it, and we're preparing to break out. And because the short interest or there's so much short interest on the USD, I think this will squeeze and will get us to 92. And the way you should be thinking about it is this is or about CPI, I mean, is we're getting these benign CPI prints in which you have to squint and use a magnifying glass to see the inflation increases, quote unquote, in spite of the USD being down 10 to 12% uh, this year. Like on this was 1372 at the lows, is still 12% versus the euro down on the year. This is fucking crazy. So we're supposed to be getting a CPI increase of 10% just from the dollar devaluing alone, and we are not. So tariffs plus the dollar devaluing is giving barely any CPI increase. Don't get me wrong, I still think we'll get a couple of months of high elevated CPI prints, but this is not what was supposed to happen. We were supposed to get an explosion in CPI, and we are not getting it. And I think we will not be getting it because the tariffs are getting absorbed by the importer, by the exporter, by the population as well. But if the dollar starts increasing right now, and I think it will, because we're already seeing this taking hold across various pairings, like for example, USD JPY is already moving higher and bouncing off the ribbon and going higher and higher, consolidating before another leg higher. USD CAD also crossing over, USD CNH also preparing to cross over. So everything is starting to look bullish dollar, and we will get a move up in the dollar. It will squeeze because short interest is high, and this will further offset any potential CPI increases from tariffs moving forward. Because if the dollar strengthens, then it buys more stuff from the external, and the tariffs are represent a less lesser percentage of the total cost because you can buy more with less dollars. So my thesis is still that we will not get an inflation spike from tariffs. There's also the point that if everyone were to increase tariffs at prices at the same time, maybe we will see a spike in CPI. But if it's spread out over multiple months, we will get uh, on average higher CPI, but never a big increase. It will last longer, like we'll have 6 months of inflated CPI prints, but not like 1% higher, like zero point 0.1 higher. The same that we had this month. And that might get completely offset if the dollar starts increasing right now. But uh, the problem with tariffs is that they will lead to an economic slowdown, like less spending. They will bring consumption down, and on top of this, the effects that they're supposed to have, meaning reducing the trade deficit, is not going to happen from tariffs alone. It's going to happen from reshoring manufacturing, which will take a lot of time. So you increase production from manufacturing, let's say, then you can export more because you have more goods, and only at that point you will get a benefit in the trade deficit, not until then. Just from tariffs alone, you will not see a benefit from trade deficit. Things will shift around and nothing will happen. Now, going back to this, and we have the pivot ribbon here as well. Like I said, I don't think we will get a move down, and if we do, it will be within the pivot ribbon at most to the 34 EMA here, but it will take a while to happen. I'll turn on Bollinger Bands, and we will soon be contracting. Let me turn everything else off. So basically, we are going into contraction phase. Let's say something like this, and this one something like this. I'll turn the pivot ribbon back on right now. So basically, the most we can go down, assuming we get that negative JPOW firing catalyst, is something like the quarter open right now. And this will be confluent with this. Actually, not the most. The most would be all the way here. And then we bounce and go higher to 650. But there's a chance that this doesn't happen either, or the pullback is just super benign, like we go all the way to like 620, turn 620 into support and just go higher afterwards. uh, mm, I think the window of weakness is just next week. The biggest risk if J Powell gets fired by the next FOMC meeting, if Trump really wants him gone and wants someone else at the head of the FOMC meeting, or he really wants a cut in July, which he might not get anyway, because if he just changes JPOW, it doesn't guarantee a cut in July. But if in his head is I want a cut in July and he pulls the trigger next week, I think we will get this. But again, I think the market will be more focused on who's coming after JPOW, not the fact that JPOW gets fired, because it's the end of his mandate anyway. So it's kind of sort of irrelevant. So let me turn this off now. I have the framework, and we'll go to the 30-minute. So yeah, basically 618, 620, retest of the lows of this range, or an extended to this area here, the previous 88 chain open quarterly open. So these are the two scenarios of a pullback. And we would get a Bollinger Band squeeze going and basically consolidate, or whether we go higher or we go lower later on. Most likely we go higher. So the two scenarios are this, or go all the way here, maybe even lower, like 610, because we have the double up rule, like we should expect going all the way to here, like 611, 6 something. So all the way, uh, like a sorry, all the way to get a fake out, not clicking stuff, get a fake out like towards 610, and then we bounce and go higher. And target is 650 for some time in August. That's my take for now. Unless something changes, I don't see us turning bearish anytime soon. And that's kind of the setup. On an individual name uh, setup, while there is reason to believe we are getting a next leg up. I posted a couple of these names on uh, Blue Sky and like Adobe with this falling wedge. This was a large print at the June OPEX that I thought we would fake out below it, but then we go up again. UMC looks very good here, like turning this pivot ribbon and flipping it to green. A lot of things. What doesn't look good is like we had Netflix dumping from earnings, and I think we get a bit of continuation because we cannot go up with everything because we are basically contracting, so the market will be squeezed into a tight ribbon. Uh, so some things has to go down, some things have to go up. So for things to go up, I think we have to have some losers. So far, the loser has been healthcare, at least this week. But let's do 1 month. So 1 month we had healthcare, we had staples, some defensive, we had some Visa and Mastercard, uh, but those were the loser. Energy was the loser, and so on. I think this will continue even on the 1 month. Even software was the loser. Like look at the CRM now into software applications were a loser. But I think software is about to reverse. I still like healthcare. Like the move from 11 was exaggerated. Uh, it's the market's favorite beat down at the moment, but that has to bottom at some point as well. Um, but getting back to this, like Netflix broke down, we see this getting rejected in the ribbon here, and I think spot will follow soon. The same kind of look. We're about to lose the 44 EMA and dump to maybe like 600, something like this. We have Philip Morris, which was on a super huge tear. And again, we're kind of turning this ribbon into resistance. I've been expecting this one for a while. It has earnings next week. Let's look at earnings as well. Earnings next week and potentially dumping. Say kind of thing, like it had that run from the previous earnings. Pepsi moved higher and beat, and we might get something like Pepsi up. Basically, we had Co up and Pepsi went down to balance the scale. Now we might have Co down and Pepsi up. So Pep was beaten down massively, and now from earnings is going up. And we might get the switch with Coke next week. It goes down, and to allow Pepsi to go up again, like that. And Netflix and Spotify sacrifice for some other things to go up. PM sacrifices for other things to go up. We have Costco not looking that great, expanding down. Maybe we have a breakdown here. Walmart looks kind of the same. It hasn't broken down yet, but maybe it does so as well, and so on and so on. So on the other hand, we have semis which are super overextended, like for example AMD is very high and could potentially do like 148 a couple of days to go down further to allow for software to go up. We have software names like CRM which had that dump that brought DIA down a lot from earnings at some point. Don't remember exactly where it was. I think this one. No, remember, doesn't matter. But it's in a downtrend for a while. It hasn't recovered, but now it's looking kind of good, trying to make a move higher again with Adobe and so on. So there are bullish names, there are bearish names, and we have to have some things that go up and some things that go down. Like Nvidia is super overextended after 90% move on the week, 4% on the weekly. So there is room to correct, but I mean, the market cannot go down that much because there are names that can want to go up and will go up, and there is room for the winners to go down a bit and correct a bit and allow the losers to recover. This is kind of my point. But this is a market goes nowhere kind of thing, like we had the past couple of weeks, like a slightly trending higher market, but nothing huge. Like this should continue for the next 2 weeks until some catalyst gives us either a move to go higher or a move to go lower. But we've been a very tight range, like 620 to 630 is not that much as a range to move for the market. It's just like 128%, 15%. So 1.5% for the market to move in for the past 2 weeks is not a lot. So we are contracting, gaining momentum potentially for a move higher a bit later on, or a move lower a bit later on. We'll see which way it goes. My bias is lower, but if J Powell gets fired next week, it's no, my bias is higher. But if J Powell gets fired next week, I think we do get that correction to like 610, 615 ish. We'll see how it plays out. But other than that, things are still super bullish. I think we see 650 in August, and we'll take it from there. That's it for this week. Have a good one. Bye bye.